I've been invested in this fund for over 2 years now, and after this 2-year period, this fund unfortunately has a return of just 0.81%. Yes, after all this time, this fund is struggling to barely break even. But despite this lackluster performance, this struggle, this fund actually remains as one of your most requested funds that you want me to keep talking about. You've mentioned this a lot in the comment section, and I think there's no fund out there that is equally loved and equally hated by so many of you. Today, we are again talking about the BPI-ALFM Global Multi-Asset Income Fund. What's going on in this fund? Again, we are revisiting, is it worthwhile? This is what we'll look to cover in this video. So let's go. But before anything, if you are new to this channel, hi, I'm Mark. It's nice to meet you. In this channel, I talk a little bit about lifestyle, but I mostly talk about business and investments. So yes, today we are revisiting our investment in the BPI-ALFM Global Multi-Asset Income Fund. I've done a series of videos on this in the past, and if you want more information, a deep dive into what's gone on in the last 2-3 years, feel free to check out my older videos in the links down below. So just as a refresher, the ALFM Global Multi-Asset Income Fund is sort of a balanced fund that primarily invests in fixed income securities and equities. Your risk appetite would be somewhere in the middle, not entirely conservative in just investing in treasuries and bonds, but you're also wanting to get somewhat exposed in the equities market. And while my personal investment in this is coursed through the BPI mobile app, this fund also shows up under GCash Ginvest. So while I'm talking about the ALFM fund here, showing its returns under the BPI mobile app, this is the exact same fund under GCash Ginvest GFunds. So before going into the details of my personal investment in this fund, let's first look at the latest document that the ALFM team has released as of June 30, 2025. I'm shooting this video in the middle of August, so there are probably some outdated information here, but bear with me. This is the most recent official document that we can pull up from the ALFM website. So when we are looking at the performance of this fund, we are actually looking at two different things. The first one would be its net asset value per unit, the NAVPU, and the second would be its dividend yield. Let's first cover its NAVPU. The returns of the ALFM Global Multi-Asset Income Fund in the last 1 year is at 2.59%. This would be in its peso class. Now, there is actually an option to invest in this fund via a US dollar denomination. Since I know a lot of you are watching this from the GCash Invest side, and I am personally invested in this fund through its peso class denomination as well. For purpose of simplicity, I'll only cover the peso class in this video. Had you invested in this fund in June 2022, your returns would be a little over 21%. So definitely in the last year, it hasn't performed as well. But in the last 3 years, we see here some better returns. So let's park this for a while now. Let's compare this to the more popular S&P 500 fund. Let's use the BPI US Equity Feeder Fund. So in the last 1 year period, the returns of the BPI US Equity Feeder Fund is at 8.44%. Again, this is only for the peso class. And if we look at a longer 3-year period, the returns of this fund are at 66.76%. So these are the kinds of comparisons that we are looking at. The BPI-ALFM Global Multi-Asset Income Fund just at 2.59% in the last year, while the BPI US Equity Feeder Fund is at 8.44%, while for the 3-year period, the ALFM Global Multi-Asset Income Fund is over 21%, comparing this to the BPI US Equity Feeder Fund, again at over 66%. So what's going on here? Why is this Global Multi-Asset Income Fund paling in comparison, struggling against the US Equity Feeder Fund? Well, that's the thing about investing in this fund. You are comparing one that's purely equities and the other as fixed treasuries, mostly bonds, and just a little bit of equities. So equities will always be more fluctuating, while this one is really, again, as the name suggests, is a multi-asset income fund. And your risk tolerance for this is just a medium, while your risk tolerance for an equity fund would be high. One big factor that's causing the multi-asset income fund to underperform would all be connected to President Trump's big beautiful bill. The treasuries and bonds market are actually underperforming right now, in the sense that foreign investors are perhaps not as trusting or skeptical of the trade tariffs, the changes that the US government is imposing on its trade partners. So in a way, there is less interest in government-backed bonds and securities. So this is getting in the way of the performance of this fund. While stocks also took a hit, a big dip in March, it's really recovered since. And again, we are talking about more volatility here when it comes to stocks. The ALFM team has indicated that they have put in a little bit more in equities. So while this fund was really even more lackluster in the past few months, we see some recovery for this fund. And even from June to August, I am seeing this. The fund is no longer negative, at least for now. So that's the performance of the fund in terms of its NAVPU. Let's now move on to the performance of the fund in terms of its dividend yields. So from the June report of the ALFM team, let's look at the dividend yield in the last 12 months. The lowest dividend yield in this last year for any one given month is at 5.8%, while the highest in these last 12 months is at 6.29%. So I've averaged this out. In the last 12 months, the dividend yield comes in at 6.02%. So this is actually higher than the projected 5 to 6% dividend yield that the prospectus has released before. So in terms of dividends, this is actually where this fund performs. So let's now look at this fund in terms of my personal investment. As mentioned earlier, what I've put in this fund is just a little over 106,000 pesos. Let's look at my dividends in these last 3 months. I've had this in the last 2 years with the goal of receiving 500 pesos in monthly dividends. So let's now check if I'm meeting this. For the BPI online investments, I unfortunately don't get any notification of my dividends versus GCash Ginvest. Again, for many of you, you actually get this through your email. You get a notification of what your dividends are specifically for the fund. But I do see it as a line entry in my savings account. So let me get my phone. For July, my dividends were at 543 pesos and 51 centavos. You will see this labeled as 4347 payment investment BMI. This 543 pesos actually represents an annualized yield of 6.15%. Let's move on to June. My dividends for this period were at 537 pesos and 51 centavos. This is an annualized yield of 6.08%. Let's move on to the previous month in May, wherein my dividends were at 512 pesos and 26 centavos. This would be an annualized yield of 5.80%. Now, unfortunately, BPI Online only lets you track back 3 months at a time. So my May dividends would be the last recorded dividends that I personally have. Just because I didn't see them doesn't mean that it didn't happen. Basically, every month, this does come in the middle of the month, if not the 15th. By the 16th of every month, coming into my BPI savings account. So let's put all this together. I started this video sharing with you that my returns for this fund in terms of its NAVPU were just under 1%. Specifically, it's 0.8%. And this was a value of 859 pesos. Again, very underwhelming. But if we are looking at this in terms of the dividends, so again, in the last 3 months, my dividends for this fund have been over 500 pesos. If I were to average this out in the last 2.5 years, specifically, I am at 2 years and 3 months of having invested this full amount. That actually comes out to dividends of 13,500 in the last 2 years. So if I were to plug in the 859 value to this 13,500, my returns would actually just be a little 14%. This puts the performance of the fund in a more acceptable level. As showed earlier, it's not going to be performing alongside the S&P 500 fund. Your risk appetite should really be different in terms of your returns here. So this return, well, it's not great, but I think what you've set aside for this fund is really different from what you are investing in stocks and equities in the S&P 500. So personally for me, I put in a lot more of my money in the S&P 500 in these US equities because my investment horizon would be for a longer term perspective. I am really looking for capital appreciation. But as an aside, as sort of a safer bet that I have here is not so much for capital appreciation, but really for cash flow that you would want. I think this fund actually works best perhaps for some retired people who already have amassed their capital and just want some regular income since probably they don't have any regular income anymore, they are retired. Its ability to generate regular monthly cash flow is really dependable. So really, that's the strong suit of this fund. As I mentioned earlier, it may be polarizing. People are hating on it because it just doesn't perform. Well, it does, but in terms of dividends, and it gives you a little bit here and there, an annualized yield of 5 to 6%. But in terms of seeing great percentages in terms of its NAVPU, this fund isn't going to be it. I mean, we usually see investments as what's the best, what is the one with the greatest return, but your portfolio should be composed of conservative and aggressive. However you want to split the pie, that's up to you. It really depends on your personal situation, your needs, your income, and what kind of returns do you want from your investment. So where do I stand in terms of this fund? Well, again, for me, it's really about supplementing, taking a portion of my portfolio, but it's not going to be compromising the larger part that is looking for capital appreciation. So this is to put into perspective what you can expect from this fund. So what do you think about this? I know those defenders will really be hot on this and really support this. And again, there will still be haters. There will be those that don't like it. Where do you stand? Let me know in the comment section. If you like this video, please don't forget to like, comment, and consider subscribing if you haven't already. Thanks again for watching, guys, and happy investing.